Okay, everyone, it's 10:30. We are about to begin our webinar, and I just wanted to say good morning to everybody. I'm Sonia Luna, CEO and founder of Aviva Spectrum, and I'm really excited to be here with information about why and how a quality assessment review, also known as a QAR, can not only positively impact your organization, but what are some of the critical next steps after the presentation that you can start implementing tomorrow. So first off, why go through a QAR? For some of you out there, the first knee-jerk reaction is, well, because it's part of our standards. For others of you out there, what I call thought leaders and true organizational innovators, they will say, because I want to be the best. If you're a fan like me of Jim Collins and his work, especially his best-selling book, Good to Great, you'll know that in Good to Great, he provided a roadmap of the 7 characteristics that moved companies from okay, good companies, all the way up to great performing companies. Having read and studied his materials, I can tell you there is a massive correlation between what a QAR should be producing and the connection to Jim Collins' Good to Great findings. The first of which is Jim Collins' concept of having, as he quoted, a culture of discipline, which is the very first benefit of having a QAR. Completing a QAR immediately provides the organization both the professional and organizational credibility that most of your competitors don't have. And I say most competitors don't have it because a recent IIA study noted that approximately over 70% of the organizations can't say they have the fullest professional and organizational credibility in the marketplace because they haven't gotten their QAR completed. Another finding in Good to Great is having level 5 leadership. You know, these are leaders who are both humble, but they're also very, very driven to do what's best for the company. In short, the why for them is, okay, the compliance to the standards, but it's a driving force to bring the organization value. In addition to that driving force of a leader, level 5 leader, they're always looking for continuous improvement, but not just it's improving and moving towards a path of improvement, but also sustainability in terms of long-term sustainability in this continuous improvement path. Lastly, a level 5 leader doesn't look to the audit committee just as a oversight function. They look to them more from what I call the ideas bench. In other words, pushing the envelope in terms of expectations, getting members of the audit committee that understand the sales growth patterns, understand the marketing ROI, how the company is entering new markets and product development, but more importantly, how internal audit has a role in that. Today's agenda is what I call short and sweet. We're going to cover the top 3 mistakes of a QAR leading to compliance penalties and fees. The other is, what is a quality assessment review according to our standards? And then the value of a QAR and the top revelations that most IA departments discover having gone through it. We'll cover a little bit about who we are, but more importantly, next steps of what you can do tomorrow when you get back in the office. So what is the #1 common mistake in the QAR assessment? The first is, well, when should when should a QAR be done? So our standards say it has to be done every 5 years, but when does the clock start ticking? So the clock starts ticking when you either had the function, IA function started, even though you may not have had a charter, even though you didn't have an audit committee, etc. So if you were functioning like an internal audit group, boom, the day that you started that function is when you start the clock to 5 years out having needed the QAR. The other triggering event is, let's say you're a development stage company, you haven't gotten an internal audit function, but you know you're going to add it. You create a charter, you create the audit committee, and now you're just kind of filling in the positions. Well, the triggering event is then. So let's take a step back for a moment on what is a quality assessment review based on our standards. So according to our standards, there are 3 main criteria of having a QAR. The first is compliance with our professional standards. That means, are you complying with the various standards as well as some of the guidance materials that are out there? The second goal is to validate the effectiveness and efficiency of your internal audit department by leveraging the appropriate resources. And the third goal, which I find the most powerful objective here, is evaluating and fulfilling the stakeholder needs. Now, when we use the word stakeholder needs, let's be clear who is a stakeholder and talk about some of their needs. Stakeholders represent your C-level executive, but also includes your internal audit staff. So this is one of the biggest revelations to most directors of internal audit and chief audit executives, because they get that much needed confirmation of how their staff feels about what they're doing day in and day out. It's getting that feedback to improve morale and overall productivity in the department. There's also what I call key financial drivers that are stakeholders, and they have needs too. Remember, most organizations have a mission statement. Most of those mission statements don't say, hey, we're an organization and we want to make a ton of money. Instead, most mission statements answer what I call, why are we here? And it's in non-audit terms. This speaks volumes as to why the organization has a certain culture, a certain set of motivational factors to stay alive. Now, in internal audit terms, this means there's a ton of opportunities to review what we call non-financial reporting goals of the organization. These are what I believe are the true valuable stakeholder needs that a QAR automatically addresses from day one when you start the process. The second most common mistake of not having it is you're not putting the right disclosure on your reports. It's in our standards, and I've quoted it here, Standard 2430, that you can look up yourself. But the essence of what's happening here in the disclosure is you have to be making it in your reports, and it's got to be clear to the stakeholders. And here's one tip that I know most of you can take away tomorrow and implement. The most common finding I've seen is in the internal audit reports, lacking not only this disclosure statement you see here, but also, the statement needs to be followed by, why haven't you done it, whatever standard you're lacking, and then followed by, what are you going to do about it? So this makes the company's noncompliance very transparent and can place a big red flag on the internal audit group. Now, I wanted to reveal a key finding for the future of internal audit and where QAR is taking internal audit in general. I was researching a couple of items, and one of the key surveys that really spoke to me was a KPMG study done for the focus of audit committees for this year in terms of what are the top priorities for them. And I can tell you, based upon this independent survey sent to audit committee members, 2013 will focus heavily on non-financial reporting objectives. In short, audit committees want to see more value or bang for their buck. And we're not talking about, finding more cost-cutting measures. Those years are gone. Companies that needed to cut the fat did it in 2009, did it in 2010, 11, and 12. Now, this survey is really in line what CEOs are most connected with in 2013 too, which is growth. So if you have an internal audit department that got stuck, or what I sometimes call, they got placed into compliance corner, just doing SOX, and there's been no operational work, you're definitely in what Jim Collins' book states, just another good company. Remember, greatness is getting the most out of what you do because you want to be the best. There are over 6 tools within the QAR assessment process that hit a home run on all key non-financial reporting measures that move a good company to a great company. And something I wanted to do today with you, going to your office today and giving you a very immediate aha moment, is fold a piece of paper in half. And on the left half of the paper, put a header there called compliance objectives. Okay. On the other half, put growth objectives of the organization. It is a very simple exercise, and it hits a home run to this audit committee priorities survey. As you're listing your compliance objectives one by one, and then going to the growth objectives, how is internal audit impacting growth? I think what you're going to find is a revelation for yourself how the C-level executives and are going to view you not only this year, but next year and the following year. So as the economy picks up, people are going to be less and less inclined to support a system that is just purely compliance, but they're going to be more inclined to a growth-oriented department. So this is a really key objective way of you just listing out how many objectives am I trying to do that are compliance-related in my audit plan versus growth-related or non-financial related objectives. So I wanted to cover just a quick friendly reminder about having audit committee meetings, and I put this as a placeholder for a lot of you that if you are going to go down that path, that in terms of disclosing, hey, we haven't been compliant, it's been shown in other studies that once you bring up certain types of disclosures, people react in certain ways. And some audit committees are very proactive, and some audit committees are very reactive. So the takeaway from this is to be prepared for your next meeting to have that conversation. If your next report will have that disclosure that we mentioned earlier in the presentation, you may get certain audit committee members that feel passionate that, hey, I don't like this disclosure statement. It's not jiving with what I thought we were doing here. So you're very well versed as to what are the priorities for them, and more importantly, if this becomes a top priority for the audit committee or the CFO, you know what to put on the top of your list. I wanted to share with you the top 3 revelations, or some people call it aha moments, that internal audit departments get having completed a QAR. So the first revelation is you're moving away from what I call the compliance corner, and you're moving towards a valued strategic partnership with management. So QARs have over 10 points where your examiner is looking to see how you've become a valued partner versus just the guy or gal down the hall ticking and tying audit work papers. So for those of you considering hiring an external examiner, I would say that your examiner should have the mindset of to find at least 3 opportunities of improvement for your organization, and most of those opportunities should be related to the company's growth strategies. So an example of that is you have an external examiner that should be looking at prior board minutes and how those conversations revealed growth initiatives and strategies. Then what they should be doing is aligning it to your internal audit department's audit plan and objectives. And for me, I think this is an easy win in a QAR process, and I would say if you can imagine an independent examiner talking about the documented initiatives and saying something to the effect of, look, it's apparent in your last 3 board minutes, this new product launch is important to the organization and the growth strategy. You've got millions invested in it. And then looking at the current and future audit plan of the internal audit group, there's no work being done to see its effectiveness. So if internal audit is already going to audit expenses related to this product launch, don't you think we should see results and audit those results to get an independent validation of this product launch to see that it's working? So I'm sharing an example with you because if you're going down the road of a QAR and you wanted to make sure you have the right type of examiner, this is a great way to get a feel for their personality and their values to see, hey, is this examiner more check the box? Did you meet standard 5510 and 2430, et cetera? Or are you getting somebody that digs deeper into, let's say, reading in between the lines of, hey, your internal audit group is stuck in compliance mode. How do we move away and truly add value to the organization on these non-financial reporting and non-compliance related items? And if they're strategic enough in reading board minutes, they should be able to quickly align those messages that they see and say, well, this is what the CEO is reporting. So what involvement in the audit plan covers that? And if it isn't, shouldn't the examiner ask the question at least to the CEO and audit committee members? So the second revelation of having completed a QAR is a huge staff productivity boost. I call this the restart button. It's taking your department layer by layer and getting them to inform you of what was past, what's present, but more importantly, what should the future be, not only for the internal audit department, but for the entire organization. The third revelation or aha moment is getting more than what you expected out of a QAR, and I'm going to actually visualize this for you. It's not only lowering turnover or increasing, morale, but it's the best practice implementation, meaning the output of the QAR should give you a list of recommendations, but also give you a roadmap of what the future should really look like for the organization. During this presentation exercise, I was going through different studies, and I was trying to pinpoint a specific study that revealed how the DNA of an accountant really works in terms of motivation. And there's been a study that just got completed in 2012, and the two researchers were looking at organizational and professional commitment and how it affects job satisfaction. But it wasn't just job satisfaction in general. This study was a very, very unique study. This was really honing in on the DNA of an accountant. What moves them when an organizational and professional commitment is there, when they can see it, feel it, hear it in the organization, and that they know it's happening? What happens to their job satisfaction? If you can sway motivation up or down, what are the two factors? So I'm going to visualize that for you here based upon their findings. So figure 1 shows you the visual flow of the two main aspects of the study. So one is organizational commitment, the other is professional commitment. And you'll see the motivation factors is the variable that they were trying to study and show what the effects were on job satisfaction. Now the output in job satisfaction, meaning what their key finding was, is that you have less turnover and you have higher productivity. But what I did in this study is I linked the key QAR tools examiners should be focused in on to drive organizational commitment or identify those lacking organizational commitment factors. So tools 3 and 10 hit a home run on organizational commitment, and tools 4 to 15 hit more on the professional commitment. So if you're getting an examiner or you're interviewing some examiners, I think it's safe to say you probably want somebody that kind of knows where they're headed in terms of the other intangible value that you're going to provide, which is overall job satisfaction. Now, the third mistake of not doing a QAR is the fact that, the CEOs and CFOs and even audit committee chairmen sometimes are just not experts on internal auditing. And they do rely on the internal audit group to show them, hey, we're compliant. Now, they're not going to read tons of standards by the IAA. They're making a big assumption on your part that you've got the right checks and balances. So it's really important to make sure you have the proper disclosures, but also making sure that you've communicated who is responsible for checking the internal audit group in terms of an external assessment. So as we're winding down here, I think we all agree we got a lot of value out of this time together, and there are some great ideas I shared with you today. What is most important to me, however, is that this becomes something that you do, something that you take back to your business and make a difference. I don't want this to just be, oh, that was a great webinar, I learned a ton. So here's what I'd like to do. I want to make myself personally available. I'm not talking about, having my staff do this specific exercise. I'm talking about myself. So for any of you that choose to take action with me to move your company forward, to do what I oversee as our branded QAR analysis, which is a $7,000 value at no cost to you. And let me just quickly describe our proprietary QAR analysis. It's what I call a very comprehensive window, okay? I say window because most of you out there want to see the future results, not just, hey, what did I do wrong in my internal audit shop? Our QAR analysis covers the basics of what to expect when you get a QAR done, but more importantly, what areas you can provide value to 3 specific groups. The first group is your C-level executives, and we're talking about your CEO, your CIO, et cetera. The second group is your audit committee, and your third group is you, assuming you're the chief audit executive, director of internal audit, and your staff members in the internal audit department. In addition to providing this valuable information, we've linked the top 7 findings of all QARs done by the IAA. These are findings, these are the red flags that you want to avoid. In short, it's telling you the likelihood of having a bad QAR final report when you actually get one completed. And if you're like me, I don't like surprises, and this method we've developed tells you the likelihood of getting those top 7 red flags and how to avoid them. So from our QAR analysis report, we determine if it's best to do some work together and how to proceed. This is an enormous value to a corporation, and it achieves it without the $7,000 fee that we would normally charge. Of course, my win is obvious. It's developing a relationship with you and your company. And I'm sharing with you our mission statement, because I talked about mission statement, and most mission statements don't talk directly to money. It's about what drives the organization, what creates that culture. And if I had to summarize my mission statement, I would say it's creating that long-term strategic partnership. And, oh, by the way, we're internal auditors, but really our core is that long-term strategic partnership. So as you can see, our mission statement isn't solely focused on compliance or internal controls. Our primary driver is having a valuable partnership with our clients. Now, in terms of next steps, I've left my phone number here, and I also have some other contact information, but I think at this time I'd like to open up to any questions for the participants on the webinar, just to maybe clarify some of my material.
Sonia, hi, this is John.
Hey, John.
Can you hear me okay?
Yes.
Wow, thank you. That was super helpful. I just want to understand this analysis that your firm does. Are you saying you do all of this for free and it helps us understand where we might grade out for the actual QAR?
Yes. It hones in. It's not only a summary graph that we provide, and it's a pretty detailed graph that shows you the hot points that you got to avoid, but more importantly, the value on non-financial reporting objectives to go to a growth stage for an organization. So moving away the internal audit group from, hey, we're just ticking in time, doing the same thing we've done year after year. It's the new stuff that the CEO is trying to focus his energy on in terms of revenue growth and other opportunities. So in short, yes, and there's also a detailed mapping of recommendations, and our typical average recommendations is anywhere from 7 to 10 different recommendations to implement yourself if you choose to do it.
Great. And is this something we can do over the phone, or you guys come on site, or how does it work?
We prefer to do this on site because there's some qualitative analysis we do, which is an interview, right? There are things that we just need to talk through, and then there's some other data that we take into account, so it's best to do it face-to-face. However, you know, given logistics, if people are out of state or timing issues, we can do it via teleconference, meeting, or web conference.
Great. Well, thank
you.
There
are
again.
10 other callers on the call.
Well, thank you again. Back up
Super helpful.
For us.
Unmuted.
Are there any other questions?
What is a typical QAR call? How long does it take?
So our QAR analysis takes approximately lead time 2 weeks. So it's actually not that long at all.
Unmuted.
I don't see any chat questions, and I think we can stay on for a couple of minutes more. So if you have a chat question, you can always just ping me here, or you have my email shown here in case there's other questions at the end or after this presentation. So we got a great comment from a good colleague of mine. I'm going to share it with the group. A good QAR is a line of defense, and I agree with that statement. It's you know, it's not only checking the internal audit department by making sure they're meeting the standards, but in terms of the fourth line of defense, it's finally getting that third or independent voice to the audit committee to say, hey, we had someone else look at our shop. We're not only doing X, but we should be doing Y and Z because this is really where the growth of the organization is going. And in terms of, I got another question via chat, the authoritative guidance about the disclosure, if you're not meeting certain standards, it's in the IIA standards, it's 2430 that states that. So it's not only if you do not complete a QAR in a timely fashion, but any other standard that you're not complying to, that one standard spells out, you have to disclose it to your stakeholders. And you'll notice that stakeholders is a broad definition in our IIA standards. So it's anybody relying on reports. And by the way, a report is not, quote unquote, it doesn't have to be a quote unquote formal report. So a lot of internal audit groups get stuck like, well, it wasn't a formal written report. That's irrelevant to the IIA. If you did an informal report and an email and you said, here are my findings for blah, 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 internal audit objective that you told me to do, it was a performance audit, blah, 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 here it is. Any results of that, you have to say, and this report, et cetera, does not abide by, and you state what standard you didn't meet. And then you have to go in disclosing as to, you know, why you haven't and what you're going to do about it. In terms of the presentations slide deck, I'd be happy to share them with you. Just ping me via the email address that's noted here, and I can shoot them off to you the next day. Are there any other questions that I can help answer? All right, great. Well, I want to thank everybody for joining me this morning and getting a great overview of QAR. And I know that some of you walked away with some great insights and obviously a couple of top 3 areas where to avoid certain mistakes. I look forward to keeping in contact with you and be on the lookout for future webinars. Thank you so much.